Welcome to another video of OptaTube. Today, we're diving into a brand new explainer on exactly how traders are turning German wind and Norwegian water into, frankly, incredible profit. We're stepping into one of the most fascinating corners of modern electricity trading, a space where the raw physical reality of our weather slams right into the digital, lightning-fast speed of global finance.
Picture this for a second. A massive storm rolls into northern Germany. You've got thousands of offshore wind turbines out there, and they just start spinning furiously, pumping out massive amounts of electricity. All that power suddenly floods the grid, and, well, because we can't easily store electricity on a massive scale just yet, prices start falling, fast. Within minutes, that power becomes basically worthless. Sometimes prices literally drop below zero.
So it sounds completely counterintuitive, right? How in the world do traders take a chaotic, super windy day of negative prices and turn that into millions of euros using just a single subsea cable? Because far away from that storm, tucked deep inside the Norwegian fjords, you've got giant reservoirs just sitting quietly, storing enormous amounts of potential energy. The water isn't moving, the turbines aren't spinning, it's just waiting. So today, we're going to look at the bridge that connects these two totally different worlds.
Let's quickly map out our journey for this explainer. We're going to hit the asymmetry of power, the NordLink highway, the actual mechanics of arbitrage, AI trading, navigating market regulations, and finally, the future European supergrid. We'll be following a single megawatt hour from a windy coast all the way to a quiet fjord and back again. Okay, Section 1, the asymmetry of power. Opposites create opportunity. To actually pull off a profitable trade, you've got to have extreme asymmetry. And this is exactly what that divide looks like. Without differences, there is absolutely no trade. Germany and Norway are basically perfect opposites here. Germany is this weather-dependent wind and solar powerhouse. It's volatile, it's energy in motion. If a North Sea storm hits, tens of gigawatts get dumped into the system unexpectedly. But Norway? Norway is hydro-dominated. It's stable. Its immense energy safely stored away as quiet water.
Which brings us to a really crucial point. When Germany's grid is overloaded, let's say demand is at 50 gigawatts, but generation spikes to 70, the prices go negative. But negative prices are not market failures. They are market signals. The market is literally screaming, begging someone to please take that power away. And Norway answers that signal. They import all that dirt-cheap German wind and use their own reservoirs as massive gravitational batteries. We're not talking chemical batteries here. We're talking about water stored at an elevation. It's pure potential energy. By bringing in German power to meet their daily needs, Norway gets to save its own water for later. Buy when it's cheap, sell when it's expensive. It's a brilliant setup.
Moving to Section 2, the NordLink highway, the physical conduit for profit. Because look, you can have the best price divergence in the world, but if you can't physically move the energy, it doesn't matter.
Just wrap your head around the sheer scale of this. 623 kilometers. That is the length of the NordLink subsea high-voltage direct current cable. It acts like this giant controllable valve that can transmit 1,400 megawatts. And they use high-voltage direct current, or HVDC, simply because pushing AC power underwater over that kind of distance would just be way too inefficient.
All right, Section 3, the mechanics of arbitrage. Let's talk about actually turning those spreads into profit. We're going to step into the shoes of the traders for a second. Think of that 1,400 megawatt highway like a motorway where only a strict amount of traffic can pass at once. That scarcity makes the cable itself a tradable asset. To lock in this spatial arbitrage, the fact that the exact same electron has a different price in a different place, traders rely on a really rigorous 5-step workflow. They forecast the wind, the hydro levels, the prices, the capacity, and then, boom, they execute. They are hunting for that split second when power is cheap on one end and expensive on the other.
But, it's never just free money. A pro trader has to calculate the net spread. Let's say your expected gross spread looks great, maybe 30 euros per megawatt hour. A beginner might stop there, but the pros know they have to subtract the friction, transmission losses, exchange fees, capacity congestion costs, and balancing risks. Whatever's left over, that's your actual net spread.
Which leads us into Section 4. AI and algorithmic trading, the sub-second void. Because honestly, human beings just aren't fast enough anymore. The intraday market is shifting in literal milliseconds. Wind forecasts, grid conditions, they're constantly updating. So modern machine learning systems instantly devour all this data. Weather satellites, radar, market depth, order books, they use all of it to map out full probability distributions of future prices in real time. They see congestion coming before it even happens.
It is absolutely wild to think about it like this. A single cloud drifts over a solar farm in Berlin, and an algorithm automatically executes an arbitrage trade before a human trader even realizes it got shady outside. The AI spots the cloud cover, knows solar output is going to drop, calculates the price spike, and submits the order. It's physical reality turning instantly into digital profit.
Quick pause here. If you are interested in energy market and power system modeling and updates and insights about global energy market, let's follow OptaTube YouTube channel. We love unpacking all these complex systems for you, so make sure to subscribe.
Okay, back to it. Section 5. Navigating Market Regulations. The Hidden Fortress. Let's talk about the incredibly complex regulatory architecture of European bidding zones. A lot of traders get the pricing, but very few truly grasp the regulations. And here, regulations are what actually dictate your profit. You literally can't understand European cross-border trading without understanding flow-based market coupling. It is a highly sophisticated system that optimizes the entire grid all at once.
The shift in thinking here is massive. Traditionally, you'd assume trade capacity only exists from one border to the next. But with flow-based thinking, a single transaction on the NordLink between Germany and Norway could actually shift power flows in entirely different countries, like Belgium or Denmark. Everything is interconnected. The algorithm is optimizing the whole continent simultaneously.
And with all that complexity comes some serious hidden risks. Algorithms have to tiptoe around carbon-adjusted costs that can wipe out a spread in seconds. But the scariest one is redispatch risk. You execute a trade that looks like pure gold, but then a grid operator suddenly intervenes. The flows get modified and your trade is just completely trapped. That's what separates the pros from the amateurs.
But here is the truly beautiful paradox of this entire system. A lot of people think this kind of arbitrage is just greedy speculation. But in reality, these algorithms chasing private profits are the exact things saving renewable energy from being totally wasted. Without them, Germany's negative prices would be catastrophic, Norway's storage would sit unused, and clean energy would literally be thrown away. By chasing a profit, they stabilize the public grid. Finally, Section 6, the future European supergrid, a planetary blueprint. Because Europe definitely isn't stopping with just NordLink. We're looking at a future full of new HVDC corridors, massive offshore energy hubs, and tons of new storage. Now, as the grid gets more connected, those easy price differences will shrink, but the market itself is going to evolve into this massive, data-heavy planetary network coordinated almost entirely by AI. The opportunities are going to become vastly more complex. Which leaves us with this really fascinating question to think about. Will this algorithmic dance we're seeing right now between German wind and Norwegian water become the exact blueprint for how humanity balances global renewable energy tomorrow? Think about a world where wind-rich regions export their surplus, storage-rich areas absorb the shock, and entire continents are linked by HVDC corridors. It's pretty amazing. Thank you so much for exploring this with me today, and remember to always keep thinking like a trader, an engineer, and a system operator all at once.